Hey, Steve.
Brett Starr.
How you doing?
Doing good. You took a walk today, huh?
I took a walk today. I'm trying to get my act together.
Really? Act as in getting on the healthy side of things?
Just getting in better shape, doing the stuff you're supposed to do when you're staring down the barrel at 50.
Yeah. I know the feeling. Went on a walk this morning too, nice getting out and get the blood circulating.
Yeah. Changes the whole outlook on the day.
Exactly. Get those endorphins. I guess it's endorphins.
It's something. Are the endorphins the part that make my legs hurt?
Yeah. Yes. Yeah.
Let's talk about this webinar series that we started last week. Right. And so we started a webinar series. It's kind of a series of fireside chats. We have very informal conversations with different, what I would consider work tech legends. I mean, our first fireside chat was just a few days ago, and it was with Michael Carden, who's the CEO and founder of Joyous, which is just really amazing company. But talk a little. That's one of what guests do we have coming up over the next few weeks? I mean, just so many.
Oh, we got tons of good guests. So this week we're talking to our good friend Donald Thompson from the Diversity Movement. We've got also coming up some conversations I'm really excited about. Talking to our old friend Julie Norquist Roy, former head of marketing over at Cornerstone On Demand, about how, among other things, they kind of made their move during the downturn after the 2008 great financial crisis, and also some peeking into board dynamics. She's been on a number of boards, and I think that being able to tap into that, talking to Julie Knight Ludvigsen, formerly SAP SuccessFactors, formerly Zendesk, now at Unit 4. And she's just an incredibly, talented, capable marketer. And I'm really looking forward to kind of like tapping into what she has to say. And then on and on. We're bringing in a lot of interesting conversations for people.
Dr. Patty Fletcher, Rob Catalano. And we reached out to these folks really for one specific reason, which is what they all have in common, is that they have been through multiple, kind of market disruptions and downturns, et cetera. Yeah. And I think what they all have in common, in addition to that, is they all flourished during those times, and just some great stories. Some of the stories that Mike was telling were really great about the opportunities that occur in moments like this. And, one of the reasons that we decided to put on the series, and if you're interested in the series, just go to thestarconspiracy.com. There's a way to register. If you're not getting our newsletters, if you're not getting our Work Tech Weekly or Work Letter Weekly or Work Fun Monthly, or, all the different newsletters that we have that are aimed directly at the work tech market or HR leadership, or, it just depends on the newsletter. Go ahead and sign up for those, and then you'll be on the distribution list to be able to register for these webinars as they're announced. But we're going to have more than a dozen of these probably over the next 6 to 8 weeks. And just some of the true, work tech legends who have been in everything from startups to unicorns to publicly held organizations, and all have a very unique perspective on how to succeed in times like these. But not just how to succeed, how to find the opportunities and really set your brand apart. I know you still tell the story of Cornerstone On Demand, for instance. Tell us a little bit about the Cornerstone On Demand story in the context of, the global great, I always call it the global financial crisis because I don't see what was so great about it. Tell us a little bit about that story, and because I think that provides a lot of insight into the themes that we're hitting on as we're talking to all these different folks in the coming weeks.
Yeah, well, I mean, it's just like the Reader's Digest version really is the story about Saba and Cornerstone On Demand. You rewind to 2008. Saba was an early leader in the, e-learning, digital learning space, had around, 100 million in ARR. Cornerstone was an up and coming company. At that time, they only were about 10 million in ARR, which is really weird to talk about and think about. But, really because of some really savvy moves that Cornerstone made during that time. And all of this, looking at financials, all of that is in SEC filings. So it's just like you can see exactly, what they were doing, how they were allocating their budget. And what was really interesting is by, 2012, it's just like Cornerstone had, overtaken Saba in revenue. And then, fast forward, a few years later, they're the market leader and they're acquiring Cornerstone. So are acquiring Saba. So it's just like, the point being is that, tough markets are when great brands are made. And I think that one thing that I wanted to throw up for discussion with you, Brett, is are we in a down market? I think that I don't think it's universal what everyone is experiencing right now. Mm-hmm. I think that and this came out in the survey that we did with the Mike Carden webinar. There are some brands that are doing just great now. You look at the unemployment numbers coming out from the U.S. Those are all still really, really positive numbers. Yeah. What's your take on that, Brett?
Well, I mean, it's kind of like the gap between perception and reality. And so often, perception is reality. If you ask me right now, based on our own experience, are we in a downturn? I'd say yes. If you ask me, is it a real downturn? I'd say, I don't know, but people are acting that way because everything that we see on a daily basis, we're primarily in work tech. We see companies doing well. We see companies with, tons of financial resources. We've tracked work tech investment for, 20 years now. In the last 2 years, we've seen more investment than, in the previous, probably 25 years combined. I think we all still feel, and I think that there's a lot of evidence out there that the work tech segment is durable, not just right now, but durable for the next 10 to 20 years. Just based on, I always tell people, the Star Conspiracy was founded based on and chose to focus on work tech based on this anomalous $200 million investment in work tech startups in 2001. And we thought, wow, if people are investing $200 million in HR software companies, this is going to be a great market. And that initial, kind of burst in investment really created, many of the market leaders that we see now. And, I say it put food on our table for a decade, but that was nothing. That was nothing compared to what we've seen in the last 2 or 3 years. So I know that, fundamentally, both on the investment side, the, vendor side, the capability to execute well in market and, the funding available to, really reinvent this whole segment again for probably the third time since we've been following it. That's all there. And on the buy side, we also know from, a lot of the work that we do, a lot of research that we do, and also just a lot of conversation with people leaders that demand is strong and that people have a very clear perceptions of what their organizational goals are. And in their perception of those organizational goals, it almost always includes kind of a re-engineering of their people processes. And it's not just, the distributed workforce or the hybrid workforce. It's, everyone likes to say it's because that is the primary dynamic that's changing about work. There are so many other things that fall under employee experience and kind of core HR and everything that are also changed and have nothing to do with, just kind of the, workforce dynamics of distribution or hybrid or whatever. And so I don't think that if you look at strong supply and strong demand and a very strong market where, people have really clear goals and where vendors are developing solutions for those goals and have the wherewithal to bring them to market in a very profound way. No, I don't think we really are. But I think that there is this other dynamic where, when the financial community sees what's happening in public markets and the tech segment is getting hammered, then that kind of causes a sensation or a fear. It will end up being a fear if it was irrational. It will end up being really smart if it was rational, right? Because nobody really knows how all this is going to shake out ever. I mean, that's just the way the future works. But there's so many signs that we're not in work tech specifically in a real downturn, but everyone sure is acting like we are. And I think that is exactly where all the opportunity lies. That's where all of the opportunity lies. When you say like great brands are created in downturns, well, what does that mean and what should people do about it? Right. And what that means is that, in times like these, leadership in the field turns over completely. It's like we're in the opening act of, looking down the road 10 years from now. And brands that we're barely familiar with right now will be market leaders. And I always, use I'm sure people are tired of hearing about it, but, Salesforce founded in 2001. Now they've got the tallest skyscraper in San Francisco. We're going to see a lot of stuff like that, right? We're going to see a lot of, organizations that come out and they, because of where they are in their business plans and their funding and, all that stuff, they just take a lot more bold action. From a brand perspective, a marketing perspective, a sales perspective, a brand perspective, and a customer success perspective, while some of the more entrenched, kind of big leaders who feel that they have a lot more to protect, kind of pull back. And that's what creates the opportunity. And what all these folks know and are telling really great stories about as we're, talking to them on these webinars, is that they know they're doing it. They know it's a huge opportunity. They know the market has opened up. They know they can control the narrative and they can achieve more share of voice because there's other people who are pulling back, which creates a lane for them to come in and not just, stand a better chance of being heard, but also what's being heard creates a huge opportunity to differentiate what they do against some of the more established brands who are pulling back.
Yeah. And I think, there's a lot to unpack there. It is a very paradoxical market right now. It's just like, I've had enough conversations with, CEOs and founders to know that, what they're seeing is, different buyer dynamics. There are certainly still areas of need that, people are buying, but there are certain categories where you're seeing a bit of, if not a pullback, then definitely a lengthening of sales cycles.
Yeah.
And I think that there's definitely, you're seeing kind of a difference between kind of must-haves and nice-to-haves.
Yeah.
And so it's just like, and how an employer draws the line between must-have and nice-to-have isn't always the same. Mm-hmm. And so, so there's definitely when we ran our survey to, our work tech audience, got over 700 responses from executives about the dynamics. 75% of them said that they had a layoff this year. Mm-hmm. And so that really was somewhat surprising. But, when you start to look at kind of what's going on in terms of what investors are telling their portfolio companies, they're being told, don't, sit on your money. You may not be able to raise again for another, 2 years. That's what they're saying. And so you need to be, acting accordingly. And so there's definitely a sense of belt tightening. But then, you start to look at what's going on with, the number of companies that are in tech that are laying off. You don't see as many necessarily work tech companies cutting headcount of late. Number one. Number two, I think that there's also work tech companies are getting caught up in what's going on in some of the frothier sectors of tech, mm-hmm. where, investors have a broad portfolio. And I think that work tech companies, the fundamental dynamics are still really good for, what, employers need to buy. And I think that, like you said, there's a really good rest of the decade run ahead for WorkTech, but in the near term, a lot of investors are saying to everybody, roll back, be conservative, don't take too many chances, watch that burn rate. And it's because they need to make up the losses that they've, suffered from things like crypto.
Yeah. Don't get me started on crypto.
No, I threw that out there intentionally. That was a little bit of red meat. But one other thing I think that's important is, to your point about, great companies being made in the downturn, it's just like you go back to that Saba Cornerstone story. The whole reason that Cornerstone was able to make up, basically the wide gap between what Saba had was because Saba really cut back on their sales and marketing. They were behaving in a very conservative way in a difficult market. 2008, 2009, 2010 was challenging, in different ways, but it was also a very different market in terms of HR tech, was still in a growth mode in 2009. I think it was like 13 or 14% growth, according to Josh Burson's research at the time. And so, companies in our space did really well, even in that market.
Yeah.
But some of them behaved more conservatively than others. And the ones that were able to step on the gas and really kind of make some moves, really were able to see some dynamic growth come out of that.
Let's break that down just a little bit. About, kind of portfolio strategy versus individual company strategy and some of the things that you brought up. I love Google Trends. Do you ever just jump around? I love Google Trends. And I was doing some kind of presentation or something last week, and I just decided to kind of look at Google Trends around the phrase just layoff, like how many people are searching, layoff, right? Mm-hmm. And I look back over like the last, however many years that they, have been tracking data or whatever. And you see a spike for, like 100% relevance, where it's like the most time it was ever, searched back around, 2008, 2009, right? So that's the global financial crisis, great financial crisis, et cetera. Mm-hmm. And then the only thing that even comes close after that is like March and April of 2020. So, strangest thing happens in, 2020. And so you see a big spike in people searching about layoffs, which is just it's just a marker. It's just a signal for people's sentiment, right?
Right.
And right now we're on a climb that's probably going to exceed where we were in 2020 in terms of people searching for layoff, right? So layoff is on the minds of, lots of people out there. It's showing up in the search dynamics in Google and, the analytics and all that stuff. And so when you think about that, that's obviously because we're seeing all of these huge layoffs in the media from, the Twitters and the Metas and there's a big list out there of, all these big layoffs, et cetera. But you have to look at the dynamics of how these different companies are funded and operated. So you have public companies, and public companies are managing shareholder value, right? You have companies who are owned by private equity, and private equity has a portfolio, and private equity tends to be very conservative because the returns that they go for are not as significant as what, say, a venture capital run organization. Then you got the VC folks, and then you've got the, bootstrapped, private, closely held organizations. So there's a mix of different types of companies, both in work tech and, in the tech sector generally, in all sectors, right? Right. When you're managing shareholder value from a public company perspective, layoffs are often part of just managing that shareholder value and expectations and trying to manage your stock price. In the private equity world, if your portfolio is like all over the place, you're managing based on your portfolio. So you're likely to see, more belt tightening there than you might see from, say, a venture capital organization. But there's this interesting cross-fertilization that happens between public companies and private equity companies and venture capital companies. And even, closely held bootstrapped organizations who they never make decisions in a vacuum. They look around and they see what's happening to everyone else, and that often compels them to make decisions that they think are in the best interest of their company because of what they see in the broader market. So I think a lot of, the fear, the concern, the trepidation is, really happening in one place, like the public markets. And then it gets really, kind of over amplified in like private equity driven organizations. And then venture capital, talk about companies that, often have to, rob Peter to pay Paul. I mean, you look at someone like Sequoia, for instance.
Yeah.
I mean, weren't they part of a little crypto situation recently?
They a little bit stung with that. Yeah,
a little bit of exposure to some pretty big financial events out there associated with crypto that are in the news right now. Mm-hmm. And so that is going to have an impact on decision making in other areas. And so, part of me is like, while these decisions are not made in a vacuum, and I would never recommend that a company makes decisions in a vacuum, I think you do have to take an inventory of what opportunities you have compared to, the opportunities that you think are available for other organizations out there. Mm-hmm. And I don't think any, like guru out there, any person who writes business books, any, CEO who became, got on the board circuit and is out there, talking about, the last 30 years of their success. I don't think any of them say that the secret to success is zigging when everyone else zigs. I mean, they just don't say that, right? And so the opportunities are always in these big counterintuitive moments. And, I hate to say this out loud, but I think in a market that's perfect all the time and, is like that for a long time, I think that there a sense of complacency and comfort grows, that you can pretty much do what everyone else is doing and you're going to be just fine. Yeah. But it's times like these that really separate. There will be winners and losers in moments like this. And it's going to be based on the decision making that you make for your company. And this is not a zig while everyone else zigs situation. This is a zig when everyone else zags. Yeah. And that is the theme that I see over and over in these conversations that we have with business leaders and some of these legends of work tech, is that they made what they may not even, like if you talk to Mike over at Joyous, I don't think Mike really believes that he was doing that as a business strategy. That's just his DNA. Like he just doesn't do things the way other people do. And he's got a real intuitive power and capability to understand how to create marketing moments and brand moments and sales moments and product moments and customer success moments that are defining moments and that stand out from what everyone else is doing. I think he does that in down markets. I think that he does that in up markets. But in down markets, like, he said it in our conversation, they are growing like crazy. He also said, I'm just trying to make sure that I'm saying things that we can say publicly. He also said that most of their clients are in like the Fortune 50, so it's not like small, companies who are making small purchases. He's selling a very advanced work tech solution to organizations that supposedly are, belt tightening themselves on the buyer side. Yeah. So where does that come from?
Well, and I think that, Mike said a bunch of stuff that I think is really colors kind of where we're at in the market right now. I mean, and I think that in a lot of ways, if you look at, what he was doing at Sonar 6 versus what he's doing at Joyous now it's very much that shift from, that phase of the market 10 years ago was still about, HR as a back office function. And now, with work tech, it's just like the reason he's growing is he is providing key insights into how work is getting done in a business. This isn't just, HR stuff. This is like, how is my business actually functioning by, putting my finger on the pulse of, my distributed workforce in the field. And, I think that kind of sea change in the market is really behind a lot of the growth that we're seeing in work tech. And when you go back to thinking about talking about Brandon's Work Fund newsletter, where he did some analysis around kind of where the money is going, there's kind of this conversation amongst kind of the CEO / investor classes of, hybrid and remote work, that's done. It's just like when the market tanks and unemployment goes up a couple of percent, everybody's going to be back in the office. And so
good luck with that.
We won't have to worry. And, there's a lot of wishful thinking there, I believe. Mm-hmm. But when you look at kind of where the dollars are flowing mm-hmm. in terms of investment, it is all about, hybrid work, remote work, the expansion into different demographics of the workforce, like the deskless workforce, automation. It's, dollars follow trends. And it's very clear when you kind of look at where the dollars are flowing, where investors are making bets, it's going into, it's doubling down on the environment that we're in from a workplace standpoint. Yeah. But it's also a lot more connected to where is work getting done and how is work getting done. And I think that in that regard, a lot of the stuff that Mike was talking about is very salient for, companies that are early stage startups and what do they need to do in order to grow.
Well, if you follow the dollars, I mean, this is just another data signal that we're in the middle of a new organizing principle. And one of my favorite parts about being an organizing principle is something that kind of changes the field dynamics and, messes with leadership dynamics in terms of, the vendors who are providing solutions and stuff like that. This is yet another signal that we're an organizing principle because you hear people arguing about the way things ought to be and the way things should be, right? Yeah. And, it kind of reminds me of the whole, cloud on-premise wars where everyone who had a stake in people keeping their on-premise solutions back when cloud computing was becoming a thing was like, no, don't go to the cloud, on-premise is where it's at. And there was a whole, new group of companies and buyers coming up saying, what are you talking about, man? Cloud's going to make everything, possible. And here we are again in a moment where, you've got half the people saying, oh, everyone's going to come back to work. Everyone needs to come back to work. It's going to be that, we're going to go back to the way things were. Meanwhile, all the money is flowing into solutions that are on the other side of this organizing principle. And you can, argue all you want about, that future not manifesting. That future is manifesting right in front of our eyes. Right. And all the money is, you said that dollars follow trends. I believe that both are true. Dollars follow trends and trends follow dollars. It's just, where are you on, on when you start paying attention, right? Yeah. Because the dollars are following a trend that a bunch of people have seen. Mm-hmm. But, the trends are going to start following those dollars when those dollars start to manifest in the solutions that are actually making this new future that's on the other side of the organizing principle possible. I would also say it's a shout out to Workday. One of the things that we all owe a lot to Workday, and to it. Workday is not a client of ours; they're not a sponsor. But one of the things that I love about Workday, and I'm not a fanboy of Workday, but I do have a lot of respect for that organization, is their CX vision. So they have a very simple customer experience vision statement, and it's been the same for a long time. And so we want to put people in the center of enterprise software. And that's exactly what Mike was talking about. That's exactly what you're talking about. I mean, it used to be that dollars were at the center of enterprise software. It was the supply chain was at the center of enterprise software. It was manufacturing. It's just the further you go back, right? It was like a different, kind of unit of measure, organizing principle. And now I think we are seeing, that people are at the center of enterprise software. And that's why we're seeing so much of a blur. That's why we started calling it work tech instead of, HCM or HR software. Because you're seeing a blur between, what used to be right down the middle of HR and everything that it touches now, so that it's just kind of becoming this big mashup category that includes so many, interesting product categories that have to work together to get shit done now.
Yeah, and I mean, it's what for me is really fascinating. Oh, and by the way, just to kind of close the door on Workday, they had a great earnings report last week. I mean, like completely like. Their stock popped. It helped kind of the NASDAQ index. Just like I'd never been so happy to see an earnings report come out, especially a Workday earnings report. But it's just like, thank you guys. Really
thanks,
appreciate it. Yeah, thanks, Workday. But the other thing I was looking at is like, obviously it's just like there's a huge kind of rollback in work tech investment from kind of the record levels we're at. I think, it's like 64% quarter-over-quarter decrease from Q2 to Q3. So I was looking back at kind of like what happened with WorkTech investment, back during the great financial crisis. And some of these numbers here are just really, really funny to look at. So, in 2008, there was $180 million in annual investment. So 180 million. I mean, there are individual rounds that are larger than that.
Yeah.
In this environment. In 2009, that rolled back to 130 million. And then in 2010, a mere 100 million in investment. But then after that, we started seeing 2011, 260 million, 2012, 413, 2013, 640. It's just like really everything, kind of coming out of the financial crisis really started to pop. And so I think that we're sort of in a similar dynamic where I think that, we're probably going to be looking at along the lines of maybe 20 billion in investment this year. And a lot of that coming from, the first half of the year and then kind of settling in at, probably, $1 billion a month clip, for the next year. So we're probably looking at, 12 to 15 billion investment, which is not exactly chump change.
What was it last year?
It was almost 31 billion.
And what was the year before that?
Not even 10.
Yeah. So you were talking about 100 million, 200 million, 300 million. Now we're talking about billions and billions of dollars, right? And here's another, difference between now and then that I don't think that people really think about that much. Is I believe that unemployment during the great financial crisis hit like 13% or something like that.
Yeah.
I don't see any world in which the fear of layoffs or the layoffs that we're seeing right now or anything like that is going to result in anything near the level of unemployment that we saw back then. And so I kind of, can't help but feel that the uptake is going to be a lot faster this time because people are going to be ready to go. Unlike last time, like companies had a lot of rebuilding to do in order to get back on, kind of the uptrend after the great financial crisis. And I don't think companies are in that same situation now.
No, they're not. But I mean, it's just like the other thing about like 2009, 2010 was interest rates were essentially zero at that point. And so it's just like in order to get any sort of a return on investment at that point in time, you had two places you could put money. It was real estate or venture capital or private equity. And so it's just like, now with interest rates, probably going to be continuing to go up, maybe not the same clip that they have been, but continuing to go up through 2023. What's really interesting is with interest rates going up, but essentially unemployment, staying, below 4%. I think, part of what's in the Fed's calculus is, we need basically, demand for mortgages to come down. We need unemployment to go up to 5.5%, 6%. And if we're not seeing unemployment budge, that's to me interesting. And also just in terms of like, taming inflation and kind of changing the dynamics, a little bit concerning that it might take longer to kind of essentially restart the engine.
Yeah.
So
I don't know. I mean, we could argue both sides. It's just, it always blows my mind. I don't think this is a time unlike any other.
Oh, yeah.
And we've certainly been in periods before where like consumer, confidence was really low. And yet, people are spending a lot of money. Consumer confidence is pretty low right now. And we just had the biggest Black Friday online in history and brick and mortar in history. And we had the biggest Cyber Monday in history. So sentiment is low, but we're breaking all these records. And that's not the first time, something like that has happened. But it seems like the stark difference between the reality of what's occurring and people's perspective of the reality. I think there's just a lot of uncertainty, and that is, kind of impacting every aspect of our lives. So this is the WorkTech Weekly podcast. This is our shareholder experience podcast. We have the Work Leader Weekly, where we talk more about, the employee experience from the perspective of people leaders. This is more right down the middle of like what's going on in the market. These webinars that we're doing are much more focused on, kind of pragmatic execution and customer experience and brand marketing, sales, product, and customer success within the context of really winning this downturn and having a lot of great conversations about whether there is a downturn or not. And, don't be surprised when a lot of the people that we're talking to, in these webinars are not experiencing the downturn the same way, because they have a long history of building truly transformational companies during moments like this. So I hope that everyone checks out the starconspiracy.com and signs up for these newsletters. And really, I encourage you to watch these webinars. I'm not saying this from a promotional perspective. I really want people to watch these because we're talking to a group of people who have been through this more than once. And their success, by any measure is astounding, but particularly their success in terms of building transformational brands during uncertain times is really something that we can all learn from. I just never get tired of, talking to people like Mike. I'm definitely looking forward to all the great folks that we have coming up, but I encourage everyone to join us.
Yes.
And why don't we leave it there? Because I actually, for once, told people to go to our website and sign up for something.
Okay.
So I feel like we should quit while we're at it.
Let's do that.
All right, man. Well, let's talk again next week.
All right. Cheers, Brett.
Bye.